up 82 points. Mike Lee with us this morning. He's wearing his Trump outfit. Mike, are you still a Super Bowl?
Absolutely. Absolutely. We have an improving economy. Okay, we have earnings exploding from the best companies in the world. Unfortunately, the government needs to refinance $9 trillion worth of debt over the next 12 months. This is putting pressure on interest rates. Okay, so interest rates, the 10-year Treasury, the 30-year Treasury, the 2-year Treasury, this should all be linked to economic growth and inflation. And it will be over time, but in temporary situations, it can get pushed out of place by things like issuing more debt in 1 year than we've ever possibly imagined issuing in 1 year.
So the debt, I mean, I'm going to call it the debt crisis, could limit any market gains in stocks.
Yeah, but what I would say, though, with that is these aren't fundamental changes to the economy or the earnings power of these companies. So it will just put pressure on stock prices for temporary periods. Basically, you're pulling on a rubber band to where once we get past this, stock prices should explode. And I'd imagine they start moving much higher before it's all resolved.
Wait. How do you get past borrowing $9 trillion in 1 year? At which point are you past that?
After 1 year.
Really?
So
we're going to borrow even more after that.
Yeah, well, but it's refinancing. We're not going to create $9 trillion in additional new debt. It's what Janet Yellen did instead of issuing debt as debt matured when she was Treasury Secretary and the $8 trillion that they added to the federal debt, she used mostly short-term instruments. So to keep the long end of the yield curve from going much higher, if you remember, something bad happened to Liz Truss.
Yeah.
In the UK, when long-term interest rates started to go up rapidly. So there's a little bit of three-card Monte, in my opinion, by Janet Yellen to...
She rigged it.
Absolutely.
She rigged the yield curve.
Yes.
Yeah, okay. I want to talk to you about Nvidia. They've got new chips, and you're telling me that they are 3 times the performance for the same price. Is it the Blackwell chip we're talking about?
Yes.
Or something else?
Yes. So everyone, the main headlines that took away from Jensen Huang's speech at CES was this new laptop that was coming out. To me, that was a sideshow. What I took away from it is the amount of compute, the amount of power. So if you think about it like a car, the V8, V12 engine needed to create these AI, the large language models, is going to increase on an exponential basis. Well, their most recent chip, for the money you were spending a year ago, you can get 3 times the amount of compute or the amount of power, or you could spend 1/3 of the money and get the exact same power that you were getting a year ago. So as more data is created over time, and it's happening on an exponential basis, so all of the data created from the beginning of the history of time until the end of the year 2003, we now do that every 2 days. In a couple years, that will be 1 day. Then it'll be 12 hours. Then it'll be 6 hours. And so this is a hockey stick type growth. So you're going to continue to need more power, more power, more power. And so the bear argument against Nvidia is that it's hardware and that you're not going to need to go through these upgrade cycles and it will slow down over time, akin to like our iPhones. Okay, I disagree with that. I think we're going to continue to need more power as the compute, the amount of energy needed to process these large language models is going to continue to increase on an exponential basis. You're going to need to buy more Nvidia chips. They are the leader. Stock is going higher.
Stock at 200 a share?
Much higher over time.
Much higher over time. Very interesting stuff. Mike Lee, thanks for joining us.
Thanks, Stuart.
All right, Lauren's looking at the movers, and I think